we talked about these inventories and ships being loaded to the gills. How much have inventories come down, according to your analysis?
Well, according to our data, they have come down a bit off their highest levels that we saw in April. And so we're looking at about 150 million barrels of crude oil that's still in storage. We still have about 85 million barrels of various refined products. Those are starting to be pulled into these consuming markets as economic activity picks up post-lockdown. But the story really varies region to region.
Okay, so is there any reason to still be concerned about tanks overtopping or ships? You know, all these people who paid $200,000 a day to store the oil, are they going to get their shirts? I almost said something else handed to them.
You know, listen, this is part of the supply and demand rebalancing in order to find that equilibrium price. So as, again, transportation picks up post-lockdown in these countries, starting with Asia and then spreading to Europe and then further west, we see these offshore inventories starting to get drawn down. What's going on in the market dynamic that kind of facilitates that is that time spread, that contango has come in. It's really narrowed. And so it's less economically profitable to store that oil overseas. Those barrels are more likely to find a home at these refinery systems and fuel distribution systems that are recovering. You can see some of that taking place, for example, in the diesel market, where European markets have pulled in some of those products and basically gotten them to consumers that are picking up their activity.
I know you're not the equity side. A lot of our viewers may have been betting on or day trading oil stocks, which have soared. Crude oil has nearly doubled, Clay. You know, people are going to be looking for the next leg higher. When it comes to the oil markets, which of course then move the equity markets, usually, you know, the equities move a little bit in advance. Is it coming down now to jet fuel and driving? Do we have to just look at, you know, all this transportation data and how many planes get back in the sky?
Yeah, I think that maybe the silver lining that's emerging right now is with gasoline. But let me say before that, all refining margins right now are definitely under pressure. And this recent move that we saw actually just overnight from Saudi Aramco to hike their official selling prices of oil, like Arab Light Blend, into Asia, has the potential to give a headwind to this recovery that you're referencing. But when it comes to gasoline, I do see a silver lining here in the United States. Those East Coast refinery systems and fuel systems are starting to increase their imports of gasoline again. So we saw that level reach about 400,000 barrels per day of imports in May. That's up 42% versus their low level in April at the height of the lockdown.
Clay,
so there are some silver linings
no doubt
there.
A lot of our viewers, let me jump in just to run out of time. A lot of our viewers, I get it on Twitter or whatever it is, saying, why are we still importing so much oil given that we've got an American industry, which, by the way, is a little better off at $40 a barrel, but that is no saving grace for an industry dripping in debt and shedding jobs. Why are we still importing so much oil?
We still need blending components to make enough gasoline for eventual rebound in demand here. But what we do see for the industry, I think that you're referencing, is these midstream companies in the United States that are especially involved in crude exports have done really well. One of the really interesting findings in our data is that throughout the lockdown period, throughout the price downturn, U.S. crude exports remained pretty robust at about 3 million barrels per day. So that U.S. oil is finding a home in the international market. As long as there's demand for our light oil, as long as the price differentials justify the cost of freight, we'll continue to export our oil to places like China, Far East, India, and Europe. That's what we've been seeing in May.